So, Catherine, can you please tell us, water is a commodity, why we are not trading water on stock exchange like we trade oil, gas, and many other natural resources? What is the economic justification of this?
So I think there are two reasons. One is that it's not just an economic issue, but it's a range of other issues as well. First, water is a commodity. However, it is not tradable across borders. By and large, we don't see big tankers crossing the Atlantic with water, but we do see that with oil, and we do see that with gas. So one issue has to do with distribution. And I think one of the issues is that in most parts of the world, water is still very local in terms of how it's distributed. You're along a river, or you're in a desert and nobody's going to give, maybe there's a pipeline, but probably there isn't. And so distribution, I think, is still a challenge when it comes to commodifying water. The second issue, I think, is even more important, and that is that water, when it is distributed and when it is priced, it is often by a public utility. Now, the local water authority. Okay, they determine the price of it. Maybe it's subsidized or whatever. So. Now there is, still the case that oil and gas and some of these other resources, there are certainly countries where the authority who owns it is a public authority. But the private sector plays a much bigger role in oil and gas and other resources, whereas water predominantly is a public utility that still plays a key role. So the third reason in which I think water is different is based on those other two, and that is the financialization of many commodities.
Right.
Means that I can buy a barrel of oil to be delivered in 3 months. So it's a futures contract.
Right, yeah.
I don't want the oil. I don't want the oil at all. I'm making a bet on what the price of that oil will be in the global marketplace in 3 months.
Right.
Because water doesn't have the same distribution, and because it's not, and because the price of it is still pretty much run by a local authority, there is not that financialization of the commodity. So if you put those three things together, still distribution being relatively more local, or certainly not global. Number two, the public nature of the ownership or the distribution channel. And number three, the lack of financialization. You put all three of those together and you don't trade water on a stock exchange.
I see. So in the very near future, we won't see anything happening on the stock exchanges for the reasons you just described.
Well, I think the financial community is very creative with looking through these problems, problem number one and problem number two. Very good at looking through those problems to create the ability to make a bet. Right? Because that's what we'd be talking about. On the stock exchange, you can buy a share in a company that has as its assets water.
Yes.
So maybe we will see some public sale, sell the public utility that is the water distribution system. Maybe there will be partial ownership. And in fact, in some countries, like the water authority does issue bonds so that it can expand the distribution network, and those bonds are tradable. Okay, so it's partially financeable. I'm not sure I've ever seen equity, but bonds are partly there. But so there's that step. We've got that step towards financial exposure. But then the next step to really get it much more of a financialization is my ability to make a bet on water where I'm not ever going to take ownership of it. I'm just making a bet on its price.
That is not happening next year, 2 years, in the next year, or in few years, or you see people working on this and trying to come up with a proper solution?
Well, there's a question whether you would call this a solution. Many people say that when an asset or a commodity becomes financialized, the price that traded at for day-to-day use, like the real, quote, real value of the water, gets divorced from a financial bet on the price of water. For example, when the oil price went to $140 a barrel, remember when that was? A couple of years ago?
Many countries, yes, of course.
Yes. So most people at that time, that was not because there were fundamental supply and demand shifts for actually having oil or producing oil. It was a financial bet on what the price of oil might be in the future. And so because there was a lot of liquidity, there's a lot of leverage, and people couldn't put a lot of money down on the table to make that bet. And when they did, we got to $140 a barrel. So that there was a divorce between supply and demand for the real thing, barrels of oil, and the price for a short period of time, but it was still there. It was a bubble, financial bubble. Not everybody thinks that that's a good idea. Being able to do that is a good idea. For example, with water, the substitutes for water are more limited than the substitutes for energy. Lots of different ways to generate energy, right?
Especially now.
But water,
one source for water only.
Desalinization, for example. There's desalinization, but water is still harder to substitute for something else.
Yes,
obviously. We can conserve water, but it's still harder to find an actual substitute.
The multi-purpose water infrastructure asset class.
Right.
What can you tell us about this asset class? Is it a popular asset class? Is it growing, or it's still being developed?
Again, let's go back to this idea that water has more of a local aspect to it. And what that means is that whether it be the water distribution system, maybe water purification system, there is definitely an asset class, particularly with bonds, for the development of these kinds of infrastructures: distribution, delivery, purification. Now, and so it is an asset class in some markets that are well developed, with being able to sell a bond to build the purification system, for example,
right,
or to sell a bond to build a better distribution system. Now, the markets where those kinds of bonds work well is where you have fairly clear lines of governance of the asset. For example, who owns the purification system at the end of the day? How is the use of the purification system going to be priced? Who's going to be paying it? So, and what authority sets the price? So when you have good governance of those and transparency about, who owns it and how does the price get set and how frequently the price might be reset.
Right.
If you have all that and you have financial markets, so you have both issuers of bonds who have transparency and good governance, and then you have buyers of bonds who understand what bonds are and know how to rate them and how to risk and return trade-offs. Well, then those bonds can work well. But there are many markets where all of that is not true. And when there's not transparency or good governance and not a well-developed financial market in general, then it's much more challenging for these kinds of infrastructure asset classes to develop. And water is no different than other types of classes.
So today, can you bring us an example of the perfect market that you just described? Do you see such markets already? What are they?
Well, I think we've determined that maybe this is not a perfect market, no matter how we look at it.
Perfect.
Well, markets where there are both sellers of bonds to support infrastructure development and buyers of bonds that are associated, that have financial, where the financial system is fairly well developed and has the kinds of institutional supporting structures. It might be political risk insurance, for example, okay, or rating agencies. I mean, the U.S. has a very well-developed municipal bond market, which is increasingly becoming transparent.
Right.
Now, it's not a perfect market because the authorities in question can go bankrupt. In some of our issuers of these kinds of bonds, the local authorities have gone bankrupt. And that means, that's a problem. So it's certainly not a perfect market, certainly not a perfect market. But in other, there are other places where there's certainly a need for infrastructure, and it's not just water. We can talk about infrastructure for a port. We can talk about infrastructure for electricity. We can talk about infrastructure for roads, where again, this is this water is an example of a set of public-private interactions, because all those examples I gave you are ones where usually the public authority is somehow involved.
I see.
Greater or lesser degree, but somehow involved. And so these public-private partnerships face significant challenges in developing asset class, having their assets being created as a class. And as you know, the OECD has been working extensively with trying to develop a set of criteria that would help underpin the development of an asset class for these types of utilities, electricity, water, roads, water, telecoms, these utilities, essential components of both well-being, but also essential components of business, to develop this as an asset class in order to channel more capital into these kinds of infrastructures.
How successful are these efforts?
Well, we know that the targeted group who we think of as being particularly interested in infrastructure as an asset class, they have expressed interest in infrastructure as an asset class, is long-term pensions and that sort of thing that have a long-term liability. And infrastructure, generally speaking, is a longer-term lived asset has a stream of payments, and so it's a natural match for a pension that has a long-term liability with a stream of outflows, the pension payments. So it's a natural relationship. Only, I think it's under 10% of pension funds, not even at double digits, invest in these kinds of infrastructures. So obviously there remain issues that have not been resolved, which would allow the bringing together of the the funds from pension funds into the asset class. I mean, if I were to pick a couple, two issues in particular, one is becoming comfortable with the governance and stability of the authority in charge of the infrastructure, the public authority, and the role that they might play in setting prices. That's one thing. And the other issue is liquidity of the assets, say the bonds, or maybe it's an equity. Just because pension funds have long-term liabilities doesn't, and so maybe they want to have long-term assets, that doesn't mean that they'd be happy with illiquid long-term assets. They still have some liquidity preference. Right. And so matching the liquidity preference of the funder who has long-term liabilities with the liquidity available from the long-term asset, I think this is a challenge that still is one that we have to face.
A few weeks ago, Paris Agreement was ratified. So in your opinion, how soon do you think we will see economic implications of this agreement, and in particular in water industry?
If we look at the history of the financialization of our energy and how much financial markets are able to create financial bets on other types of assets. Financialization of oil and gas has been around for quite a while. Financialization of, for example, contracts in copper or steel, those are relatively more recent. And so there's I would say that there's a couple of things that have to happen. And I think that ultimately it's a tipping point issue that once you start to see some futures contracts written on an asset, then and you get good returns because there aren't very many players in the market, then you see a lot more financial entities entering the market. And this is true of even something like currencies. Non-deliverable forwards on the renminbi. You can't take ownership of the renminbi, but as soon as somebody said, I'll come up with this instrument called a non-deliverable forward on the Chinese currency, yes, and people will bet on that, right? Yeah. And so thinking about, so that's, it's almost like financial markets get in their head, I can invent this instrument to make this bet. Now, I think we get back to the first challenge, which is the local nature of water. That it's not a global marketplace at all. Water is very, very differentially priced depending on basically supply and demand in the local marketplaces. So I think that is really the thing that stands in the way of deeper financialization. Whether it be both a bond or equity in terms of a tradable asset, or in terms of financialization, which is making a bet on some future price. It's still the localization of it that stands in the way.